Hey everyone, me Kevin here. Boy oh boy, we gotta talk about some major damage the United Nations is warning of, what they're asking the Fed to do, and something called opportunistic disinflation. That's a critical part right there. We're gonna talk about that. Also, I got an email this morning from somebody saying, hey, good morning, Kevin. I clicked on the link, wanted to check, I saw the initial opportunities to invest in HouseHack were only until September 30th. Is the opportunity still available? Yes, absolutely. Remember, the goal with HouseHack is to offer you more warrants the earlier you invest in my startup HouseHack. So if you invest in September, you got up to 65% in warrants, which are somewhat like call options. I'm keeping that simple. Read the PPM to understand that completely at househack.com. And then it goes down to a max of 60% by the end of October, and then probably it'll go down to a max of 50% by the end of November. So you kind of just have these small little drop-offs. So if you're an accredited investor, and if you're not yet, don't worry, we're working on the non-accredited. But if you're an accredited investor, go to InvestReady, get a letter, or send us your W-2s or the 1040s of your tax returns by going to househack.com, and we can get you in. Remember, the sooner you get in, the better, but we are approaching about $30 million in funding. I just want to keep that communication very clear, so sorry if that was unclear. Yeah, it's my fault. All right, so the World Bank 2 weeks ago, in coordination with the United Nations, has warned of a global recession, and that's because of this synchronous rate hike cycle that we're in, where the World Bank president is now suggesting that global growth is slowing so sharply, and that further slowing is likely going to push countries into a deep recession. The president of the World Bank says that, quote, "My deep concern is that these trends will persist with long-lasting consequences that are devastating for people in emerging markets and developing economies." But not just those. Because, see, the World Bank believes that when the United States sneezes, the rest of the world gets really sick. And this is where they're now warning of a globally synchronized stagnation. This is really bad. This is where all of a sudden the Fed basically pushes the entire world to the extreme, because what happens is the Fed raises rates. That makes the dollar stronger, which hurts and makes basically home inflation more challenging for other countries who are importing things, especially from America, because the dollar has gotten so much stronger. Or maybe they're trading for things in dollars, like maybe they want to buy oil in dollars, and now all of a sudden all of that is more expensive. It's not just we could literally see the price of oil come down, but because they're trading for it in dollars, for them the price of oil is actually going up, which is an inflationary pressure. So if you're importing goods, you're getting screwed by a strong dollar. So what do you have to do? Well, you have to be like the United Nations, and you have to flip-flop, and you have to get aggressive. You have to start raising rates aggressively. But if you raise rates aggressively, now all of a sudden large countries across the world are all synchronized in this aggressive rate hike path, and we could end up pushing us into not stagflation, but potentially straight up stagnation or a deflationary environment where all of a sudden we see inflation drop off a cliff. But now we've just killed the desire of the consumer to spend. We've changed everybody's mentality from, hey, save some money and spend, to, okay, we're in a panic, just don't spend at all and just try to survive and get through this. And that can actually lead to an even deeper recession, if not depression, which ultimately requires bringing out the money printer again. And here's an interesting stat. The United Nations mentioned, and this is both the United Nations and World Bank here in coordination, the United Nations mentioned that a Federal Reserve rate hike of 1% reduces economic output in rich countries by half of 1%, and economic output by 0.8% in poor countries. So you're actually seeing a magnified impact by 30 basis points in poorer countries compared to rich countries, but in both, you're seeing a crush. And it's worth noting that we just went from literally 0% to 3.25% in less than 8 months. That's insane. Actually, 7 months. It's wild. Now, there is talk about, quote, "there is still time to step back from the edge of recession. that, quote, we have the tools to calm inflation and support all vulnerable groups, especially poor folks, right? But the current course of action is hurting the most vulnerable, especially in developing countries, and risks tipping the world into global recession. And then obviously followed by that stagnation. Really, really bad. But now, the compounding problem of all of this is no, not that Jerome Powell hasn't invested in HouseHack, but that everybody is interested in signing up for up to 12 free stocks with Webull. You can go to mettkevin.com/Webull and you get up to 12 free stocks with Webull when you open an account. It's almost the trading brokerage that I use on a daily basis. Check that out, link down below. But the next problem has to do with opportunistic disinflation, and this is a really interesting one. So the Federal Reserve back in the 80s dealt with really high inflation. We got Paul Volcker, right? We got rug pulled to the point where interest rates went up to higher than inflation, over 15% interest rates, to push inflation down and prove to the world that no, we are going to end inflation. Well, they never set a target in terms of where they're going to go. So when inflation plateaued at 4%, they were willing to wait 15 years for inflation to go from 4% to 2%. Because there really wasn't any kind of economic data that said 4% inflation is really that bad. They were willing to go from 15% inflation down to 4% and then just chill. So when we plateaued at 4% inflation in the 90s, it actually wasn't that big of a deal. The problem is now we have a Federal Reserve that is convinced we need to get back to 2% inflation. Well, in order to get back to 2% inflation, we might have to continue to aggressively raise hikes where we are pushing not only us, but developing countries and other even rich countries into depression. The reason for that is we might see inflation very quickly fall to 4 to 5% over this next year. All of the factors of inflation are pointing in that direction, whether it's commodity prices, metals or fuels or energy costs or used cars, or eventually what will happen to the housing market, which is what we're going to take advantage of with HouseHack. Like, inflation will be coming down. But if it lands at 2 to 4% and the Fed says, nope, sorry, got to keep tightening the screws, we got to get to 2%, and they don't actually U-turn, then we could end up going into depression. And this is why, as desirable as it is to try to pre-price in the Fed U-turn, and that's why we're seeing the market, at least over the last couple of days, trying to go green again and have sort of a bear market rally or relief rally, so to speak, is because the markets are trying to pre-price in that the Federal Reserve will U-turn, that they'll soften. Not only will they pause rate hikes, but they'll see they have to come down and be okay with maybe a plateau at 3, 4, 5%. But that's going to lead to potential credibility issues because they've so cemented this idea that they're going to get to 2% and they're not going to stop until they get to 2%. Well, if they flip-flop on that again, well, then the next time around, the Fed might look and go, oh, now we really got no credibility. It's a problem. I don't know, though. Let me know what you think. Is the Fed going to U-turn, or are they going to stay strong until we get to that 2% inflation? Will they pull fate out of the drawer again, which is FAIT, flexible average inflation targeting? We'll see. Let me know, comment down below. And check out househack.com. If you got questions, email ir@househack.com. Thanks, bye.